With Bitcoin sitting close to 100K at the moment, which is a number that we hoped for in the 2021 bull run, but we sadly did not get until right now. The question that's been on most people's mind right now is what's next? What's going to happen to the altcoin markets? What's going to happen to Bitcoin? What's going to happen to the meme coins? And will we go for a retracement? Will we go further than 100K? Then how much more room do we have in terms of Bitcoin for a movement? And I'm going to answer all of this in this video. So just to start off, and this is going to be a really important point moving forward, is that after breaking the previous all-time high back in March of this year, we basically went through a huge consolidation period that lasted about 6 months. Now, throughout this consolidation, even though Bitcoin only went down by 33%, the majority of altcoins went down much more than 33%. But the key point here is that the fact that this retracement, in terms of percentage, was not very big. You have now formed a really tight area where price found almost fair value, where traders were happy to buy at the lows, sell at the high, and just continue trading within these prices. So this now basically becomes an area of accepted value, or as more traditional traders would call it, a value area. This is really important because historically speaking, you need these types of value areas to provide support on the way up. Now, for example, if we were to go back to the past on the daily chart, for example, let's say that over here, you form a little value area, right? Not a huge one, but does not change the fact that you still had a value area over here. Price came down, found support. Because historically, this is an area where traders agreed that, this is a decent price for Bitcoin. And so as price makes an aggressive move out of the zone, there are a lot of traders who have limit orders still filled here. And when I talk about these traders, we're really talking about institutional traders. We're not trying to trade alongside retail, trying to follow what the big money is doing. Because let's be real, movements like this that quite literally takes billions of dollars to just make a move like this possible, they can only be done by the institutional traders. And so if we want to capture the largest moves in the market with the highest probability, it makes sense that we would want to be following alongside the institutional traders. So in this case, it makes sense that there would be a lot of unfilled orders that, institutional traders were taking their time trying to fill. And this also has to do a lot with their size. They cannot just press the market buy order because then they're going to get screwed by slippage. And so once price returns back to this area, all these open orders get filled and price has an aggressive bounce out of this area. Going back to another previous value area, you can see that, the moment price comes into this value area, boom, you're out. And you need value areas like this throughout the course of an uptrend to give you a sustainable pump, not something that goes straight up and, comes straight down. Ideally, you want these value areas to be formed on the daily chart, which is currently what we're looking at, because it's a high time frame and stuff that happens on the daily chart holds a lot of strength. And so, for example, here you have a value area, price comes down to find support yet again, and then boom, right? Now, to the order flow traders, you can also say that this is order flow, and you are right. Now, before we start getting into what this box here means and what this box here potentially means, let's talk a little bit about Bitcoin first. So Bitcoin's currently almost at 100K. Now, 100K is going to be a huge psychological number. And for those of you who have been trading meme coins, who have been trading anything really, you understand the power of psychological numbers. Previous all-time high, well, guess what? We went through a 6-month retracement after hitting the previous all-time high. 100K has been talked about from as far as I can remember since back in 2019 or like 2020, right? That's where people set the targets for the 2021 bull run. Now, obviously, we stopped short, sitting at just under $70,000 at the end of the 2021 bull run. It does not change the fact that this is going to be a huge number. It's an area where everyone is looking at to potentially take profit. And so right now, you're already dangerously close to that area. I would say starting at 99K to 100K is going to be a really critical zone where I believe there will be a short-term retracement, meaning you will retrace fairly sharply, in fact, after you hit that level, but you will come straight into a value area before potentially going higher. Now, this is value area number 1, but I also want to talk about this later. But just to paint you a picture, if we set the area around 100K as a psychological level, chances are price is going to hit this level, get rejected, potentially try to retest it. Now, this is going to be a really key move. If you get a lower high around this area, then expect price to really come down here to retest this value area and honestly, potentially lower, what I would bet. Now, if price were to make a higher high at this area, then chances are that this value area is going to hold as some sort of a bottom before price continues moving upwards is going to be much higher. So that's scenario 1 and scenario 2 painted out. And now you might be wondering, like, hey, AOC, what is this bottom box right here? And this bottom box here is known as a demand zone. Now, I want you to take a look at how the move, basically, like the explosive move, starts here. Now, this essentially ties back to the previous concept that we talked about before with the value areas / demand zones. Now, you can also say that this is a demand zone because price shoots aggressively out of this value area, and a lot of institutional traders have open orders that have yet to be filled, and they completely missed out on this move. And so the fact that price is already established that, first of all, within this zone here, if you take a look just at the left, just on the right hand side of the screen, I'm going to draw the value area high where volume is most highly concentrated at. And if we draw the value area low, and let's say it's over there, this is your VAH and this is your VAL. And look just where this box lines up with. Previously, we've established that on the weekly chart, this is a huge value area. The price is very unlikely. Like, in fact, you will even say it's impossible for price to dip below this value area here, just because of how much volume has been traded and how much interest the market has shown around these areas. Unless you go into a bear market, then yes, this area will be broken below. And if this area gets broken below, just look to sell everything that you have once you get a retracement bounce, because we're in a bear market and stuff is just going to go lower. But back to the topic at hand, this is your demand zone. Move starts here really aggressively. So a lot of institutional traders would have missed out on this move. This also lines up with the Trump election. And speaking about Trump, I did call this publicly, but this is also a demand zone that price literally filled on the day of the election itself, and this is where price took out from. So what I'm trying to say here is that this is a concept that's been proven time and time again to be able to predict bottoms. For example, this is yet another demand zone, and as long as order flow is bullish, you want to look for these demand zones, especially if it happens on the daily chart. This is where you get the highest probability moves. So demand zone, boom, shoot up, you form another demand zone here. I'm not going to get into the intricacies of how to identify these, but for now, just understand that this box right here falls under a daily demand zone. And this also lines up with the value area high within the zone. And so if price were to retrace all the way down here, this is going to mark the bottom for like a moment where everyone in the market's going to be panicking, like, hey, is the bull market over? Bitcoin's been retracing for a month. Bitcoins went from 100K all the way down to 70K. You'll have a lot of futures liquidations. You have a lot of open interest being wiped out. Like, this is going to be a really high panic move. And yet you guys will be ready, because this zone here, let's just say that stuff in the markets tends to be priced in. And if that is the case, then expect this to be a really strong bottom in the event that the market does dump from 100K all the way down to 70K. This will be your opportunity number 2 to jump in alongside the smart money and ride this all the way up to 150K or something. There is also the very likely possibility that the majority of you watching this video do not hold Bitcoin, much like myself, and you are not interested in trading Bitcoin either. Feel free to use this more as a gauge to time your altcoin entries with the Bitcoin entry, because let's face it, as much as we like to say that meme coins are uncorrelated to Bitcoin, as much as we like to say that altcoins have, graduated away from, being correlated to Bitcoin, they very much still are. For example, right now, Bitcoin is going straight up and it's dancing alone for the last, 4 days. And take a look at what altcoins have been doing the last 4 days. They've been sort of taking a pause. If you take a look at meme coins, in the last 4 days, Popcat has went from $2 all the way down to $1.45. With, in the last few days, has been dumping. Why? Because Bitcoin is sucking out all the liquidity in the market at the moment. And this is something that happens as long as Bitcoin continues to go straight up. Now, you can only imagine what happens if Bitcoin goes straight down. Then the markets are going to react accordingly. So feel free to use whatever I've shared in this video to time your altcoin entries, and this is how you're going to be able to catch some generational bottoms before price goes up by 5 to 10x. And one last thing before we move on is to predict where if Bitcoin just shoots past the 100K psychological barrier and continues to keep going up. Ideally, we would like some levels where we can potentially to take profit before the masses, so that, we secure our bags before the masses have any chance to do anything. Now, 2 things to note about drawing this Fibonacci extension. First of all, we have currently just hit the -1 standard deviation expansion, which means that this could very well mark a temporary top for Bitcoin, even before price hits the 100K psychological level. Now, the way these standard deviation expansions work is that it's literally just top to bottom +1, right? This is the same amount of range This is +1, and this is based off of mathematics. In the past, when quant traders and algorithmic traders were coding price delivery algorithms for the markets, when they were transitioning away from people going to the stock exchange, passing in papers, placing their orders verbally to an electronic-based trading system, this is the rules that it was coded on, which is why instead of, a magic random number, I use standard deviation expansions. So currently you have just expanded one standard deviation out of the range of the last 6 months. So this could already mark a potential top. So if you want to take some profit here, it's not really a bad time to do it, because if Bitcoin dumps from here, everything else follows. If Bitcoin goes up from here, everything else doesn't quite follow. So here is a fantastic time to take some profit. This could very well be a temporary top. Now, if Bitcoin does break above the 100K level, then there are two levels that we're going to want to look for. Now, the negative 1.618 extension is one of the, in fact, it probably is the only Fibonacci number that I use because it's just so accurate when it comes to crypto. So this sits at about $112,000. So if Bitcoin were to pump straight through 100K, this would be the target. Highly unlikely that it hits 120K because markets don't usually go for 2 standard deviations. Because if the market moves normally, it doesn't tend to go for 2 standard deviations. But if it does, you can see here from this move here, if we expand it out by 1 standard deviation and 2 standard deviations, that actually marked very close to the top. And so this is in the event of an explosive move, which currently Bitcoin is looking like it's doing at the moment. And so in the event that it hits the -2 standard deviation, this is where you absolutely want to take your profit and run. Because now I want you to picture this. If Bitcoin goes all the way straight to 120,000 in a singular move, this would be Bitcoin going 2x, quite literally, straight up. This is neither sustainable, and there is going to be a lot of euphoria and a lot of uncertainty at this price. There is going to be a lot of euphoria, and chances are altcoins are not going to be performing the best. The only thing that happens from here is Bitcoin goes down, right? Nothing goes straight up or straight down forever. Back to even previous moves, if we were to draw standard deviation expansions, you can see the top comes very close after a -2 standard deviation, which means it's 2, which essentially just means 2, like if we were to draw this box out, that's 1, and that's 2 standard deviations away from the range, right? This is stuff that you really want to pay attention to. This is not stuff that gets talked about regularly in crypto because this is very much based in, traditional smart money trading. But this is the exact type of breakdown and the exact type of trading that you're going to get for watching this channel. And speaking of which, if you've watched until this point so far, currently, if crypto is a bit too overwhelming for you and you would just like a place where you can get all the information condensed into tradable setups, complete with exact entry, stop loss, take profit, as well as just getting access to cutting edge information and alpha so that you can get into coins early before they pump by 10 to 20x, feel free to join my alpha group by clicking on the first link in the description box below. But otherwise, feel free to drop a coin that you would like an analysis to be done on, and I will know that you are an OG for watching until the end of this video, and I will try to make one of those videos as soon as possible. But otherwise, peace, safe trading, and I'll see you guys in the next one.